Good afternoon, Victor Bales, Highlands Mortgage, coming to you from my house, my studio upstairs. The kids are outside doing yard work, so that's kind of cool since they're home for who knows how long on that. But just wanted to kind of bring you a mortgage update. It is a mess out there. As I described last week's video, things seem to be even getting worse here. I want to kind of give you an idea of what's going on personally on some of my own production. So I was pulling a report today, and in the last few days, I have 9 transactions that are actually not going to close now because 9 of these home buyers, and all of these are purchases, 9 of these home buyers um, are actually got laid off, and we cannot close a loan when you're laid off. We cannot utilize that income. I had this happen to a day before closing, and one of the clients, we called for the verification of employment. Client got laid off. We can't close a transaction. So what happens there? Well, many of these had great interest rates when we locked in on March 9th, the lowest it ever hit. They were at 3.25% on a 30-year fixed and lower than that on a 15-year fixed. And so now these rate locks are going to expire. So what happens? Actually, we either got to extend it, and there's going to be a cost to that. But the question is how long do we extend it for? The longer we extend, the higher the cost is. So we don't even know. So we're going to have to take some guessing if we can keep the transactions under contract and if we can get an extension. So we're going to kind of make it up as we go along. Many of you may have heard in the news that the government's talking about this forbearance program for current homeowners, that if you're laid off and you can't make your payment due to COVID-19, that you don't have to make your payments up to 90 days. I want you all to be very, very careful on this. There is legislation and out there, they're talking bills, legislation, policy, but nothing's hammered down here. And so every servicer may be a little different here. And so if you were to, let's say, skip 3 payments or go into forbearance, technically after 90 days, they could say, okay, we want your first, second, third payment, and here comes your fourth payment due. Now you owe a big ball of money there. Consider it's like going out to the pub and putting everything on your tab. But when you leave that pub, they want you to square up and pay them full. So be very careful. Utilize this tool or get the exact information from your servicer on how this is going to work. From what I understand, these servicers are not going to report these late on the credit report, but this could cause a lot of problems later on. So be very careful. And if you have to use it, I understand, but just please do your homework or give us a call. Maybe I can guide you through that there. Talking about interest rates, on March 9th, it dropped to really an all-time low. And then all of a sudden they started bouncing up and down and up and down. And we're finding these little pockets, like just on this Monday, rate desk opened up about 10 a.m. and boom, rates were really good for about 90 minutes. So we were able to lock some clients in, and then the rest we've been waiting and we've been checking every day. I truly believe rates are going to come down to those all-time levels once we see light at the end of the tunnel on this COVID-19 thing. Right now, everybody's too scared here. Rates are rising on the government world. They're almost out of the park, and that's because the servicers don't really want that money. For example, if we were to sell a government loan or close a government loan and go to that servicer, if that person defaults on that first payment, maybe because of COVID-19, we, the lender, have to now buy that loan back and we have to service it for life. And now we don't have that money to lend to other people. So it's very high risk. And if the servicer has the loan and the client did make the first payment, but the second, third, fourth, and all that were kind of deferred, that servicer's still on the hook to make those payments. So where's all that money coming from? And so that's a cash flow thing, and it's going to get very difficult until all this gets hammered out. For current clients that I've got in the pipeline on your refinances on Rate Watch, I'm watching those rates every day. And when we hit that target rate, like we've discussed, I'm going to give you a call. We're going to discuss, do we lock in or do we lock and roll? And for all you purchase people that are pre-approved for a purchase, here's some bad news because we at Highlands Mortgage on our government loans raised our minimum credit scores to 640, but I'm seeing lenders out here right now raising minimum credit scores to 680 on an FHA loan, for example. And here's some other bad news that the FHA, or let's say call it the MISH, Down Payment Assistance Program, that's gone. The FHA 203K, gone. Okay, the home style renovation, gone. Uh, Bunch of them here. Jumbo loans, very little money for the jumbo loans. And this is just today. This stuff is going to continually come out as we move along, and or if this thing gets worse here too. Income and assets, we used to be able to go back 4 months and use statements that were 4 months old. They're going to now say it's only within 60 days. Verifications of employment. We used to do it 10 days before closing. We'd get a verification of employment, which we still do. Now we have been told we must do a verification within 3 days of closing. And I've had a couple clients that lost their job within that 3 days of closing, and now they can't close the loan. So that's us as Highlands Residential Mortgage, but I see this happening, starting to happen at every lender. Everybody's starting to hunker down. So I just want to kind of let you know what's going on there. If you have any questions, concerns, log on to victorbales.com. Give me a call, 734-417-2115. I'll try to keep you updated out there. But my advice, hunker down, save your money because you can't go out and spend it anyway. Be very, very leery of this forbearance program. Utilize it only if you absolutely have to. And what I do see coming out of this thing when things get better is I see rates are going to improve. And I think a lot of people, since they have this financial hardship, are going to dig into that pent up equity. I think we're going to see a cash out refinance boom to pay off some debt, put some money in their pocket, and prepare for wave two if that comes in the fall here. So, any questions, give me a call. I hope you have a great day. I'll keep you posted. Thank you.